But then the obvious choice in that scenario is, do you want to grow unit volume, in which case you'll have to adjust prices downward, or do you want to grow at a lower rate or go steady? It's sort of a choice there. My bias would be to say, like, okay, let's grow as fast as we can without putting the company at risk, which would mean, in that scenario, profits would be low to negative during a recession, provided the cash position is okay. I think that's still the right move long term, because there's also something that Tesla possesses that other car companies do not, which is extremely fundamental. That is that the cars are upgradable to autonomy. And arguably, an autonomous car is worth many times what a non-autonomous car is. So even if your margins are extremely low in selling the car, the subsequent upgrade to it being autonomous is worth a lot. So, and that's something that no other car company can do. Only Tesla can do that.
Everybody's predicting that somehow Tesla is going to fold its tents up and disappear. Well, that ain't going to happen. I think that probably Tesla, they could cut their profit margin in half, still make more than everybody else is making, and probably capture more market share.
In this video, Tesla drops the hammer with global price cuts, including huge cuts in the United States to take advantage of the extremely corrupt $7,500 EV tax credit, which miraculously didn't classify Tesla's Model Y as an SUV, unless it had the 7-seat option. This is a huge demonstration of Tesla's pricing power and an absolute disaster for Tesla's so-called competition. As we heard Sandy Munro point out in the intro there, Tesla could halve their profit margins and still be making more money than anyone else in the automotive industry. No, I didn't say making electric vehicles, I said in the automotive industry. Outside of China, there aren't any companies making any money on electric vehicles, period. No, really. So how in the flying fuck are these companies going to compete with Tesla? Now that Tesla's vehicle prices are so low in the US that they can take advantage of the $7,500 tax credit, the only way they can compete is to massively cut their prices. But they're not making any money on their vehicles, so if they cut prices, they're going to be losing thousands upon thousands of dollars for every vehicle sold. Not a sustainable business model. And just in case you happen to have a short memory, it was just a few months ago that Elon Musk said out loud that Tesla's prices were embarrassing. It was inevitable their prices would come down. Nobody should be surprised to see these pricing adjustments, and there'll be more in the future. The general trend will be down, sometimes up, but general trend will be down. Stunningly, I think the stock market also realizes how bullish this is for Tesla. If I were a betting man, I might have thought, big price cuts, especially in the US, people are going to freak out and think there's no demand, next minute Tesla down. Well, it was down a fraction today, but compared to other automotive manufacturers who are down much more, I think that paints a pretty clear picture. Even the stock market's figuring out the implications here. If the best vehicles on earth, electric or otherwise, are also cheaper than anything else, even slightly comparable, it's game fucking over. And that is where we find ourselves today, ladies and gentlemen. And a special shout out to all of the new Patreon members. There was an influx of new subscribers overnight. I guess you guys and girls wanted to see the latest exclusive video. I don't blame you. If you're not a member, you can join with the card in the corner or the link at the pinned comment.
Tesla is slashing prices of its electric vehicles in the U.S. and in major European markets as the company looks to boost demand. The move comes on the heels of recent cuts in China, Japan, and South Korea as competition in the EV market grows. Yahoo Finance's Pras Subramanian joins us now with more details. And Pras, this also has to do with the Inflation Reduction Act and the various credits that people are eligible for. Couldn't look for the word eligible when we're talking about these price cuts.
Yeah, that is the big factor there. And, we had heard reports of inventory building up, new inventory building up since the first of this year because people were waiting for those price cuts. They knew they're going to happen because the way that Treasury had laid them out, it didn't really make sense. So here we are with these new price cuts. So I want to start off with a couple notable ones here. The Model 3 Performance from $62,900 to $53,900. Now, this is one of the cars that has that $55,000 price cap,
That's
right?
a big reduction.
That's a huge one, especially for a car that's already sort of relatively cheap as an EV. And then the Model Y, right? The Model Y Performance you see there, $69,900 to $56,900. Now, that cap is still $55K for that car, the 5-seat variant. And then now I hear the Model Y long range all-wheel drive, $65,900 to $52,900. Now it is below that $55K cap for those tax rates. So that car, when you add that $7,500 tax rate, that goes down around $45,000, right?
I have a quick follow-up question. Yeah. These are starting prices, right?
Correct. Yeah.
So, like, if you get all-wheel drive on the 3, that's another $10,000 on top of that.
Well,
do the credits apply to the base price, or do they apply to the total price.
So the base Model 3 was already below, is at 46.9. It was already below. So that went to 43.9, I believe.
Got it.
This was the all-wheel drive performance, and that was above the 55K. Now it's below it. So now it's going to qualify it. So we're going to see people kind of come in now and probably start launching in on those orders. People cancel orders too at the end of the year because they thought this was going to happen, right? So we're going to see those orders come. We're going to see probably big delivery numbers in Q1. But the big question is, and people like Dan and I have talking about this is the right medicine at the right time. But the big question is, what happens to those margins, right? They're going to come down tremendously, and that's going to be probably a big discussion on the call on January 25th.
Now here's a very important piece of context. We're looking at Tesla US pricing from the start of 2021 to today's price cuts. You can see visually, Tesla prices increased dramatically from the beginning of 2021 until early 2022, peaking early to mid 2022, and finally come back to approximately the same point they were at 2021 at the beginning of the year. If I move across just to the table, we can look at this in a very simple format. Tesla's Model X Plaid is the same price today that it was at the beginning of 2021. Did you know that Tesla's costs have actually declined in that time? Did you know that? You did, right? Good. Tesla's Model X long range is $20,000 more expensive than it was at the start of 2021. The Model S Plaid, $5,000 cheaper. Model S long range, $15,000 more expensive. Model Y Performance, $3,000 cheaper. Model Y long range, $3,000 more expensive. Model 3 Performance, $1,000 cheaper. Model 3 long range, $3,000 more expensive. Model 3 rear wheel drive, $6,000 more expensive. Now I wish I didn't need to point this out, but I do, because the narrative from the bears already, oh my god, there's no demand, margins are getting crushed, it's the end of the fucking world. On average, during this time frame, Tesla's costs have fallen. There have been some increases on some things. Material costs are coming down, parts costs are coming down. There was some inflation, but it was temporary. It's coming back now. Tesla is benefiting more from economies of scale. And if you average these price changes out, the average Tesla today, the price is still higher than it was at the beginning of 2021, despite their costs having fallen in that time overall. There will be an impact on margins, but it's going to be a lot less than a lot of people realize. Remember the unit economics. The more Tesla sells, the lower their fixed costs are per vehicle produced and sold. This matters.
Okay, so this also begs the question of what happens for consumers who are now looking across some of the other options that have either made their way into the market already or are available for orders, and then they decide to take delivery elsewhere because they can offset what they're paying in the deposit by just taking delivery on some other car somewhere else.
Yeah, I mean, if you're cross shopping Ford Mustang Mach-E, you're cross shopping the Volkswagen ID4, the Tesla Model Y and Tesla Model 3 become infinitely more compelling at these price levels, right?
Absolutely nailed it. Rip Tesla's competition, like for real. Just imagine you're a consumer, you're thinking, oh, I don't know, Tesla a little bit expensive, I don't know, maybe buy a shitty EV because I don't really, I don't want to pay that much for Tesla. Next minute, not only has Tesla cut prices, but now many of the vehicles that weren't eligible for the $7,500 EV tax credit are, meaning another $7,500 off on top of the price cuts. I mean, seriously, I said it in the intro, I'm going to say it again. Just imagine, you're Tesla's competition. You're trying to compete with Tesla. Your products aren't as good, and you're not making any money on them. And now Tesla has massively cut their prices, and the net cost to consumers is even lower because of the $7,500 incentive. What do? Drop your price by $10,000, $15,000, bleed another $10,000, $15,000 per every vehicle sold and go bankrupt faster? Doesn't end well. This is why it's so important to have compelling technology that's ramped up to volume. Nobody has this outside of China beside Tesla.
Those cars will also qualify for that price, those tax credits. So it just makes the Tesla equation much more, a better equation for consumers at this point. I mean, the question is like that's pure profit that's getting cut, right? That's really bad for them.
Well, and to your point, it might be good for consumers and not great for Tesla. I mean, Tesla had that terrible year last year. This year, it's up 0.3% so far. So it's not, in other words, it has not seen a big rebound. Yeah. And we are sort of digging into what happened with the company and what's going to happen next. Yahoo Finance actually had the chance to speak to economist Paul Krugman, who's also, of course, a New York Times columnist about Tesla. He's been writing about it a lot. And he explained why he thinks it's never going to be at the same level as other tech giants from a real perspective.
I know this is kind of obnoxious and a bit bad, but two red flags just went up there. An economist and a New York Times columnist. Probably not worth listening to what this guy's got to say, so we're not going to.
So effectively saying it's overvalued, and that's why, part of the reason why it's come down so much.
Well, yeah, I mean, it was the kind of industry leader, the pioneer, and it got that attractive valuation for so many years, and now it's saying, you know what, you guys are just like GM, Ford, and Volkswagen. You're making electric cars, good margin, but not astronomical valuation. So I think Paul Cramer is kind of right in that sense that it's not a software high margin company. It's going to become like a regular sort of industrial car maker But if you're asking Elon Musk, he'll say, my software is better than anyone else's. We have the suite that we can make. We can actually add that margin back in software.
I mean, it's almost like it's a victim of his own success because the goal is for it to be a mass product. But when it's a mass product, the margins come down.
Yeah.
Because it can only be a mass product by being affordable to a large number of people.
Well, congratulations to Julie. I think she's finally figured out Tesla's secret master plan. Drive their costs down, reduce their prices, expand their market, dominate.
Tesla shares, we just showed them to you, down 6% as we head into the open 15 minutes from now. That may drag down the entire sector as well. The company cut prices on some of its vehicles in the U.S. and Europe by as much as 20%. Tesla may be looking to boost its sales this after it did fail to hit its delivery target for 2022. Still impressive, of course, with sales up some 40% year over year, Jim. But these are the key models. They now fall below the price level at which they will now be eligible, or consumers will be eligible to get some of the tax benefits available under the Inflation Reduction Act as well. So that could also stimulate sales for Tesla.
Well, let's go into this. Let's talk about the fact that, let's use Ford Motor, okay? Ford has got the F-150 and they have the Mach-E. 70% of their customers they were possible Tesla customers. The Mach-E is direct Tesla competitor to the Tesla Y that's being cross-shopped. I bring all this up because what's happening is Tesla makes about $20,000 a vehicle. So they have plenty of margin to give away to tempt people with lower price vehicles. So what they're doing is actually kind of using the old Henry Ford Model T position. They're cutting price in order to be able to keep their market share. What's interesting, David, is that therefore the margins are going down. They still make a lot of money, hence the downgrade today to sell up. Now also in California, there is a major negative for Tesla customers because big Mach-E spike there. Big Mach-E spike. So I am saying, yes, there's actual competition for the first time.
Right.
Then there's price cutting.
The Model 3, the Model Y, these are sort of some of the key ones, obviously.
Look, you compete on price. He makes plenty of money per car. And so he's competing on price, but the Model Y has not been updated in a long time.
When your job is to have an opinion on literally everything, you often say things that are as dumb as that. Model Y hasn't been updated in a long while. Jim, are you high, my friend? Have you not learned that Tesla constantly iterates, updates, and adds new features? They don't have model years. They just make their shit better when they can, repeatedly and constantly. This is one of those things that really does my head in. You think there's anyone on Earth today taking delivery of a brand new Model Y? I think, God damn, dude, this car is just so outdated. Tesla does things so differently and so much smarter. Some people just cannot wrap their head around it. The traditional automotive industry, as I've said in the past, they sit around in their little rooms, okay, what can we do this year? What are the new things we're going to put in the 2023 model? They spend a whole fucking year deciding about the size of the new cup holder they're putting in there. Then it's a gigantic circle joke, hey, congratulations, what a great idea, but don't put that feature in yet, let's wait until next year, because then we can sell more because the 2023 model has a bigger cup holder than the last year's model. It's just really embarrassing to hear people that don't know what they're talking about talk. Just because Tesla isn't releasing the 2023 version, the 2022 version, people assume, incorrectly, they haven't updated the vehicle since the very first time it was produced because the name didn't change.
It's a dominant player, though. I just think that you have to accept the fact that the world has changed.
You mentioned
Tesla has real competition.
They have real competition, but to what extent has that already been reflected in a stock that, as we know, is down some, 70% from its high, Jim?
That is, normally I would like to be able to opine on that better. A lot of this, I think, rests on the fact that these were overnight price cuts.
Yeah.
Overnight. So it's going to cause you to it takes your breath away a little.
And again, to your point, you have sort of, as always, differing views. Guggenheim does downgrade Tesla to a sell, saying the numbers are far too optimistic.
Imagine, in early 2023, downgrading Tesla stock to a sell.
We still haven't gotten the fourth quarter report. We got deliveries and production, but we didn't get the actual earnings report from Tesla. And they say $89 is their price target. Why? Well, sizable gross margin miss in the fourth quarter.
Of 650 basis points.
By the dilutive impact of price reductions already. And they feel like this year's estimates need a reset. They're well below consensus on gross margin at Guggenheim. That's at least a part of it. At the same time, Dan Ives says, hey, you know what? This price cut is going to actually stimulate a lot of demand. And we see a higher expectation of revenue growth.
Okay, the problem with Dan Ives' analysis is what have we never had to see? We've never had to see a price cut to stimulate demand. This company had this field to itself. I think that I'm debating in my head what you said, which is, isn't this why the stock is falling so much? But the one thing that we don't know is, what is he doing right now?
What's Elon doing?
Yeah.
At this very moment, I'm not sure.
Well, what is the possibility that he's not as focused on his car company? I mean, remember Jack Dorsey?
Well, that's...
The downfall of the Jack Dorsey empire was the fact he was doing 2 jobs. This man's doing 3 jobs. And I am sure that Twitter is taking some of his time.
There's no doubt that Twitter is taking some of his time. He's only one man. He probably only sleeps 4 hours a day.
Have you been in the BMW EV?
No.
It's unbelievable. Have you been in the Mustang Mach-E?
I haven't, Jim. No.
It's incredible. Have you been in the GM Hummer?
I have not, Jim.
It is outstanding. I always hated every other EV. Suddenly, I'm thinking, what the hell am I doing with an ICE?
Really?
But yeah, because these car companies are delivering EVs that make me say, you know what? This is no longer Tesla's. They still are the dominant player. But the other ones that are coming out, wow.
And that is the key consideration for investors.
Did Cramer just admit he's still driving an ICE vehicle? We need to talk about this because Cramer's acknowledging Tesla was the only game in town, and now some of the so-called competition's credible that now has him asking, hey, why would I be driving an ICE vehicle now that there's some credible competition to Tesla? Hey, Jim, why weren't you just driving a Tesla in the first place, you dumbass? Oh, wait, I know why. Because your charitable trust biggest position is Ford stock. I forgot about that.
How do you read the price cuts, Colin? Some people are saying it helps them actually qualify for some of the EV credits in the new legislation to have lower prices. Do you think it's a demand story? What is this about?
Yeah, I think it's multiple things. One, certainly there's some concern around demand, and all the commentary around going into a recession. It looks like there's some inventory that's been built in China. But I think this is an example of a good offense being a defensive move. I think they're going after this market, getting into consumers' homes, building some goodwill with folks around the price moves as folks make some decisions around buying new vehicles. And they're going to push a lot of product into the market as a result. We still think there's very compelling economics from a total cost of ownership perspective for EVs, and this makes it very compelling both in the U.S. and Europe with where these prices are going to shake out.
So where does valuation stand now that Tesla's had such a big sell-off over the last year versus estimates, with some still cutting, saying the numbers are too high?
Yeah, I think we're waiting for the fourth quarter numbers to look at where they shake out in the fourth quarter because they didn't sell everything they produced, and so there's potentially some headwinds there. We're also seeing a lot of the commodity prices come down to levels that it could turn into a tailwind for them on margins going into 2023.
Important point, by the way. Material costs are coming down, meaning Tesla's costs to produce vehicles are coming down, plus Tesla's ramping up 2 new enormous facilities, and as they ramp up, the margins grow on those, plus their cutting-edge latest factory designs, they'll be more profitable than, say, Fremont and Shanghai. And the unit economics themselves, the more vehicles Tesla's selling, the lower their fixed cost per vehicle. Colin's right here. Tesla has a huge margin tailwind this year. They've made price cuts. Part of this is to spur consumers to purchase vehicles with a $7,500 incentive and uncertainty around that. And now, throughout this year, Tesla's margins will incrementally climb as they scale up production and continue to drive down costs and see material and parts costs continue to come back to reality. Meanwhile, everyone else attempting to compete with Tesla is still losing catastrophic amounts of money on every vehicle sold.
I think we're looking for some incremental information from them when they report here about where margins shake out. Historically, the company's pointed to Porsche-like margins in the mid-30s as a potential for the company, and certainly this is a process of industry building and a technology node change, and so there's going to be some ups and downs here. I think we want to see where it's going to level out here in the next quarter or two, and start thinking about what this looks like long term as some of the new models get into the market. But I think that we're going to see a little bit of a dip on this pricing dynamic, and we'll see things start to level out by the second half of the year for the company.
Just finally, wanted to take a quick look at Tesla stock versus some of the so-called competition. Tesla stock today down a mere 0.94%, $1.16. At the same time, Rivian stock plunged 6.43% today, Lucid down almost 2%, Ford down over 5%, and Government Motors stock down almost 5% as well. Surprisingly, it's almost as if the stock market saw this Tesla pricing move as bullish, which, by the way, it is. The thing that's surprising is the stock market realizing that. It's bizarre. It seems like, at least on this occasion, the stock market's not as dumb collectively as I generally assume. I just want to wrap up with a very important piece of information that a lot of people don't seem to understand. Tesla vehicles are Trojan horses. It's not the vehicles that matter. The vehicle is what people think they're getting. It's what people think Tesla's selling. No. They're selling vessels for future autonomy. Inside these Tesla vehicles is the future possibility and inevitability that over the air, like that, they can enable full autonomy. Robo-taxis. Everything changes at this point in time. As Elon said earlier in the very intro to this video, if necessary, Tesla will continue to sell through production irrespective of their margins. Now, don't get me wrong here, they're still going to be very profitable even after these price cuts. But Elon's point, in the recession of all recessions, should that play out, Tesla will just keep selling production and drive the prices down. They don't mind having flat or even negative margins because it's not about the piddly money they're making on the hardware. It's about the future potential for software revenue and robotaxi revenue. When FSD is solved, when autonomy is solved and the robotaxi fleet awakens, not only will take rates on FSD skyrocket, meaning consumers left, right and center will be paying $15,000 pure profit to Tesla out of nowhere to turn on this feature. But as the robotaxis begin to operate, Tesla will be taking a cut, maybe 25-30%, something like that, of all robotaxi fares driven in Tesla robotaxis. Pure profit once again. This is the money printer. This is what matters, and this is why I describe Tesla vehicles as Trojan horses. The fact that they're making absurd industry-leading profits and still will, even after these price cuts, is a sideshow. What matters most is massively expanding their fleet of Trojan horses. Because the day they solve autonomy, it's fucking over. So, a little bit of food for thought. Let me know in the comments below, were you guys surprised to see what happened with Tesla stock today? Or have you realized by now that it's entirely unpredictable, super volatile, and it's anybody's guess as to what Tesla stock will do after or before a certain event? By the way, guys, there's a load of juicy stuff dropping on Patreon these days, so if you're not a member, you really are missing out. Getting close to 275 exclusive videos and counting rapidly. If you're not a member, you can join with the card in the corner or the link in the pinned comment, and I'll see you over there. Love ya.